Hello, trader friends. Welcome to the Uncle Tony podcast. Today, we have an incredible guest, one of the smartest people in finance, one of the smartest traders that I know, that I follow myself. And welcome, Tom. Welcome to the podcast. How are you?
Yeah, fantastic. Great to be here. Big fan of yours as well. So this will be fun.
It's going to be a lot of fun, Tom, because your trading style and mine, I think, are a little bit similar. Of course, everybody is different, but I think we're going to enjoy it because I want to learn from you, and hopefully our listeners can get some good tips today from both our styles of trading.
Perfect. Excited.
Now, Tom, let me, for those that don't know you and don't follow your channel, and please follow Tom King. And can you tell us a little bit about you, where you're from, where do you live, a little bit about your personal background?
Yeah, absolutely. So yeah, I'm here in the Midwest in Ohio. I've been here since the day I was born. So Midwestern guy, but been trading for a long time since about the 80s. So the mid 1980s or so. My original, I got started in the 80s we put an investment club together with my dad, my friend, a couple of friends of mine, and their dads, and that kind of got the juices flowing back then. And
And when you started that investing club, was it mainly stock?
it was all stocks back then, and that was really for a couple decades for me. It was primarily everything was stock.
Well, that's
I
pretty
was
cool.
fascinated with stocks. Yeah.
And your dad was a big stock market person?
Yeah, he was just open to anything. So it wasn't him that got me into it really, but he just came along for the ride, and we it was a great father son thing that we got to do together. We would go to a couple conferences. I'll tell you one of the things that really got me going. I don't know who will remember this in the audience, and you have to think be our age, is Wade Cook. Remember Wade Cook?
Yes, I do.
All right, the cash flow, meter drop guy.
Yep, yep,
So
yep.
it was Wade Cook who my dad and I went to a conference of his,
Wow.
got us into the whole covered call thing and selling premium, and before he went to jail.
Not for selling covered calls, but yeah, for something
No,
else.
for a few other things he was doing, but that's where I got into it. I mean, and it was stocks, and then it was selling premium and selling those covered calls and getting the meter drop of you get paid the premium, right? When you do the covered calls, and learning some technical analysis back then. So I think that was really what started to drive me early on.
So you were smart enough to understand that it was cost basis reduction, and improving your probabilities without even maybe think conceptualizing it back then. But that's exactly what you were doing. You're
Mhm.
generating income from assets that you own, reducing cost basis, and improving your probability. So that's pretty smart. Yeah.
Yeah. So yeah, and I didn't get all of the nuances that I know now, and I didn't understand volatility, and I didn't really understand a whole lot of anything else, and I didn't really understand theta, although had the concept of premium decay,
Right.
and I was just buying a stock, writing calls until it got called away,
Hmm.
uh, and that was really early on, and then a little bit more into active trading after that in the 90s, when we got all the way up into the dot-com bubble and the
Hmm.
tech bubble, just trading things. We had an active trader website
Wow.
uh,
And
back then that we
were you
all
using
of us ran.
fundamental analysis, technical analysis, or how were
It's
you
always
basing
been
your decisions?
technical.
Hmm?
So it's always been technical
Technical,
analysis for
technical
me.
analysis.
Uh, and I've never here as we go through it, but as an active trader back then, mostly stocks.
Right.
Okay, and I did the covered. I started with the covered call thing, and then got away from it a bit and went more towards, you know, you put a short out the other day or something. I think on chasing the Holy Grail. Well, I chased the Holy Grail from 85 to 95. I chased everything, and so I was trying to just learn more, get better. What else can I do? This is okay. What can I do to get better? And so I tried a ton of things, and what I really found was uh, active trading. I was pretty good at it. I was
Yeah.
pretty good at chart reading for the most part. And then fundamental analysis always frustrates me,
Yeah,
and I'm because you can come out with the best earnings ever, or be the greatest fundamental company, and the stock goes down twenty
it's
percent
horrible. Yeah, yeah,
because somebody says something wrong in the middle of a trading conference, and it tanks the stocks.
yeah. Supposedly, in the long run, fundamentals matter, right? But even in the
That's
medium
what they
term,
say.
they really they don't. They don't. It's absolutely crazy. And about chasing the holy grail, I think all of us have been doing that. When I started trading, it was fascinating when I learned, a long call vertical, short call vertical, an iron condor, a I said, which one of these trades is gonna be the trade that puts me over the top? And then I started doing just one type of trade, and then it worked for a little bit, and then it didn't stop working, and I jumped to another one, and that's why I did that video, because I think we're all chasing that one solution, one formula that will make us successful. And you know, what's your take on that?
Yeah, and I think YouTube and Facebook have made it worse. So you've got yeah, and Twitter. So you can't you can't be on any of these platforms without seeing somebody that generated 5% in a day, and scalping or trading something or has some kind of system
Right,
that you're inundated with it. And if you really don't have a plan and know what you're doing, you're just going to keep chasing. Well, hey, this guy keeps doing this zero DTE thing over here, and he's doing great, so I'm going to get in. And then you lose 4 days in a row, and you
right.
have no capital left, and now you've got to go try something else. And I think this social media, there's a lot of people out there, and they may be good traders, and there may be some that are not so scrupulous people, but
Right.
you see it and you want to do it.
It's absolutely crazy. And to me, I see these young guys who've never seen a down move in the market, some guys that never suffered any pain, and they're giving incredible advice to people, and people follow their advice, and they execute on their retirement funds, on their life savings. And it's really, really mind-boggling. And going back to the Holy Grail, I have developed some, like, rules that I tend not to break, and I break sometimes. Of course, we all break our rules. But for example, one of my rules, like my holy grail rules, are death before debit. And when I say death before debit, is death before paying for extrinsic value. So every year I write down, in fact, all my trades, I write them down on a spreadsheet, and then I analyze them at the end of every week, and then every month, and every year. And believe it or not, most of my losers, or I would say 90% of my losers, come when I decided to pay for some extrinsic value. And so that's why that became one of, like, my holy grail things, not really the strategy, but trying not to pay for extrinsic value.
Yeah, totally agree. And I think I mean, selling premiums. What I do, I'll tell you, it really was tasty. Tasty trade that really was the final nail in the coffin to me getting away from the whole active trading type of a piece, and going back to my roots, which was selling covered calls,
Right,
which is not my favorite strategy anyway. But back then it was fine, and it works great in an up market. But it's not my favorite. But really, just selling premium. How much extrinsic, how much theta can I generate
right,
out of the trade, and managing the trade properly, and coming up with for me, I have a pretty detailed trade plan. And it's really one of the focuses in our trading group, is to make sure you have a plan. And I do share my trades, and so do others.
yep,
I really don't want you to follow it. What I want you to do is I want you to figure out what strategies make sense for you based upon your plan. And I put out a couple of videos this week even on it, where I'm just trying to stress the fact that your risk tolerance and your goals have to match.
right,
And you
right.
can't be trading strategies that are going to generate, that you're trying to generate 3 or 4 or 5% a month, which doesn't seem like a lot, but it's a
It's a
decent
it's a
amount of risk
crazy
to try
amount.
to make that much money.
It's a crazy amount. And
It is.
it try to generate 3% a month by selling premium. In my point of view, you're taking a tremendous amount of risk, and people that really don't know how risky that is. And um, and Tom, so after you started trading stocks, you started selling covered calls. then what was the next step for you in your trading career?
Yeah, I think you had to fail at a bunch of things, and that was again my kind of the active trading phase for me in the '90s before I really landed into just sticking with premium selling,
Yep.
a lot of defined risk type trades at the beginning to just get comfortable with it. I wasn't comfortable selling naked puts at the time. Now I wouldn't. Teaching my kids, I wouldn't even want them to do defined risk. I want them, hey, naked trade,
Yep.
it's fine
Yep.
as long as you know what you're doing. And
Exactly.
there's just too much. There's a lot of that fear around those types of trades. But I think I love being on the other side, taking the premium trade. I love getting farther away.
Yep.
I feel I'm a conservative guy, even though 2 to 3% is what I'm shooting for, and I'm trading mainly futures. So I
Right.
know there's a decent amount of risk in there.
There is.
But anything more than that is a tremendous amount of risk if you're not hedging and you don't have a defined plan.
Definitely. Definitely.
But that's where I settled in and just keep honing strategies and tweaking and playing with them a little bit.
Were there any people that really defined your trading career or influenced you to the trader that you are today, right now?
I don't know that there really are, to be honest with you. I've got bookshelves of books, and I've tried to read everything by anybody, and uh, I just try to take a little bit from anyone out there. But I don't know if there's anyone specific. I think just I gravitate towards premium sellers
Yep.
and anybody that's. I'll tell you one book. I think it was Lee Lowell. So he's on YouTube
Yep.
as well,
Yep.
and Lee had a book back. I don't know how long ago. It was a really good book to get you started. And I'll tell you, I think following what Lee was doing in selling premium to me was it solidified that's where I want to be. And then shortly after that, I think Tasty came around
Yes.
a little bit more and really solidified that that's what I'm going. That's what I'm going to do. I just had to find my own strategies and my own management, but the principle of just being a premium seller, I think, has been there.
And during your premium seller career, uh, has your trading plan changed tremendously? I mean, going from what type of trade did you do maybe 7, 8 years, 10 years ago to 3 years ago to what you're doing now? How has that evolution come through about?
Yeah, I think with every direction that the market takes. So when the market's heading in, I want to put myself in the best position. So I'm a big probabilities and strategies guy, and my whole life is run by probabilities and strategies.
Right.
Okay? I'm not going to do something unless I have a high probability of winning. I don't care if it's trading or something else in life. I want to be able. I want to give myself the best chance. So what strategy can I employ that's going to give me the best chance to be successful over time? And
Right.
as long as I'm consistent with doing the same type of thing, I think I'm in pretty good shape most of the time. But it's definitely evolved. I again still always experiment. I did a little bit more of the zero DTE stuff. I still do it. I've figured it out, I think, pretty well. I'm pretty good at it. It's not the majority of what I trade. It's a
Right.
very, very small speculative part to just keep me engaged on certain days. But I like the longer term. I'm a premium seller, but I'm longer term. I'm not really the 45 DTE guy. I'm the 60, 90, 120 DTE premium seller. I
Right.
like going out a little bit more.
Yep.
I like getting a little farther away because I want to be safer because I'm a big chicken. But I also like the extra premium that I get
Right.
uh, there. And I think I just evolve each year. And I'll tell you what, the one thing for me was 2022 was the end of stocks. Okay. For the last 3 years, I mean, it was getting smaller and
Right.
smaller and
Right.
smaller as I went to SPX or indexes and
Yep.
futures.
Yep.
And now I don't own a stock in any portfolio. Retirement, I don't own an ETF. I don't own a stock except for SPY. I don't own anything. My accounts, my mother's retirement accounts, my kids, my wife's accounts, there's not a stock to be found in any single account anymore. It's all basically futures or indexes, or mainly options on futures or indexes.
You know, your path is exactly the path of a person who evolves. And of course, we all started trading individual stocks, and then we get burned with one or two really bad trades, and then we say, "Oh, I don't want to trade this individual stocks anymore." For me, I used to trade maybe 50, 100 underlyings, and now mainly I only trade the indices, and I see the same pattern with you. I mean, it's the normal evolution of a trader who just gets sick of getting hurt doing different things, right?
Yeah, and I think the nail in the coffin was UNH, United
Oh
Healthcare.
yeah. Hmm.
United Healthcare, good stock. It was moving up. I think it was the CFO was speaking at some kind of conference somewhere and said he thought there was going to be a slowdown in the industry, and the stock tanked like 20% or something the next day because he just made some off the cuff comment at some conference somewhere, not even on a conference call, just
Right.
speaking to a group. It got out, and I happened to be in that stock at the time, and with I think it's just like a put credit spread or something on it. And I'm like, I'm no longer, I'm done. I'm not trading stocks. I'm not even trading options on stocks. That was the nail in the coffin because, why do that when you can trade a basket of underlyings that, hey, if one or two, if Apple goes down, it's not the whole market's not going to heck because you
Right.
got Microsoft or Tesla or Nvidia going up. So one stock's not going to hurt you quite as bad.
No, no. To me, it was Google. I did a upside call ratio spread on Google, and I thought I had a big margin up to two standard deviations, and then Google blew it out of the park. This was like 7, 8 years ago, and I lost a small fortune on that. And I said, "That's it. That's it. I'm not gonna do that." And your trade wasn't even earnings; it was just a comment.
No, it was just a comment by a guy at a conference that had nothing to do with earnings or anything else, and he tanked the stock. I took a nice little loss on it, and I'm like, yeah, that was. I was already getting frustrated, and I think that was just like the nail in the coffin. I'm like, I'm done, no more, and moved off of that for pretty much for good for the most part.
One of my trading mentors, of course, besides Tom Sosnoff and Batista and Tasty, was a guy. I don't know if you ever met him, Bobby Lee. He was a good friend of Tom from New York, and Bobby Lee and I became really good friends. And he told me, let's analyze a earnings iron condor. And you look at it and say, geez, I'm collecting $2 and I'm risking eight. And he used to say, "Are do you want to do that trade?" And I said, I really don't want to do that trade. So he used to tell me, if you don't want to sell it, buy it. Of course, that's against tasty commandments, right? So,
Right.
but I started doing that, and you would be surprised how many times you would make money if sometimes when I don't want to sell something, I would buy it just for fun, even though I'm breaking my rule, death before
Hmm.
debit. So sometimes, I buy those for fun just to keep me engaged in the stock market, and those turn out to be very, very fun trades. And he also used to be tell me that I have this option that's really, really killing me. And he used to tell me something which was crazy, and I now I do it, but at the beginning he says, if you're really getting killed on that option, let's say you sold it, she would say, close it and buy it. So take the loss and go the opposite way, which to me was, it didn't even cross my mind. You would adjust, buy the other, sell the other side, whatever. And sometimes, lo and behold, that little switch,
Hmm.
you make your money back. But these are all, rules against just psychology, because we all have this one option, one trade that's just killing us. And when I have that thing start killing me little bit by little, I flip it, and so I close it and then I buy it. And it's crazy
Yeah,
how it sometimes it works out. I mean, it's really, trading is really so mental, so psychological. It's absolutely
and that's
nuts.
kind of. I mean, so I've got like 18 rules that
Yeah.
I live by. It sounds like a lot, but
No, I have
I'm
like
pretty.
22. Yeah.
Yeah, so I'm pretty good with these rules, and I stick to them. I almost no, it'd be extraordinarily rare if one ever was broken. But
Can you share some of
you know,
your top rules that you have?
yes, I mean, certainly, and the one rule that comes to mind a little bit when you're saying that is, uh, I never, for me, I just stop out of a trade and I don't revenge trade, which would be trying to get it on the other side.
Right,
So,
right,
never revenge trade or try to show the market that it's wrong, because the market is always right.
right.
And if a trade's going against me, one of the things that I stick to, and it's not a tasty way necessarily, but is if something goes against me, I stop out. I don't adjust. Okay? So I am not an adjuster, and I've seen things just go bad. You're in a strangle, and you roll up the untested side, and then the thing reverses and goes back down the other way. So now you rolled it up right into
Yep,
the movement, or somebody's rolling out in time. If you're wrong and you roll it out, well, all you're doing is taking more risk in a direction that it's already going wrong against you. And to me, it's like an opportunity cost,
yep,
because I always think in terms of running a business. So
yep.
trading's a business to
It
me,
is.
and doing consulting and helping people run businesses, it's opportunity cost. Like if I could stop on that trade, take the loss, because I could put that money to work in a trade that has a better looking setup right now
Hmm.
than trying to hold on and wait to prove the market wrong, or wait to prove myself right. I'm good with just getting out and moving on and putting a new trade on. Like I said, it's the opportunity cost. I bake it into my expectancy that I'm going to lose X amount, so just lose
Yep.
and keep putting them on. And if I stay consistent and my size stays consistent over time, my positive expectancy will win out over time, and I'll be just fine.
For me, for adjust, I do adjust, but I only adjust one side. For example, I will move the puts up because I'm believe it or not, I'm not so worried about the downside. I'm always worried about the upside. I've been hurt really really hard in my trading career. I think I've lost uh for sure more than $1.5 million selling calls. And so to me the call side is scary, the short call side. So I do adjust the
Mhm.
puts up, but I would never ever adjust the call down, because I know if I adjust the calls down, this thing is going to skyrocket and I'm going to be uh, killing me. And the government is printing so much money. Any It doesn't matter what administration we have, Republican, they're all printing a lot of money, and asset
Absolutely.
prices, that just makes asset prices go up. So I think if you have enough capital to hold your trades, at the downside, it's going to be painful, but it's going to be painful temporarily, you know and then,
Mhm.
because inflation is going to move every asset up, sooner or later you're going to be out of those puts that were in the house of pain. But the calls could be there forever. And so that's one of the you know the only times that I adjust. And what's another, that's a very cool trading rule, I love it. What's another cool trading rule that you have?
My number one rule is, plan your trade and trade your plan. I mean, it's if you don't. One of the things I find, especially in like our trading service and stuff, we get a lot of questions like, "Well, here's my trade. This is what's happening. What should I do?" Well, if you're asking me what you should do, you didn't have a plan to begin with
Right.
in the trade. So,
Right.
what was your plan? Well, I don't know. I followed your trade, or I followed someone else's trade, or I put this on. You got to have a plan, and I'm very big on number one, you got to understand your why. Why are you even trading? What's the goal of your trading?
Right.
Are you 57 like me, and somebody wants to retire when they're 62?
Hmm.
Okay,
Hmm.
well, if you have 5 years to go and you have X amount of money and you want to get to X amount, what's the plan to get there? And does that plan match up with your risk tolerance? Maybe you don't have enough to retire,
Right.
so you're going to have to take more risk. Are you willing to take? Well, I don't want to take more risk. Then you're not going to be able to get there in 5 years. It might take 7. But put a plan together. Understand your why. Why are you trading? Because I find, especially from a motivational standpoint, when you have your why written down and you have your goals written down, they become real.
Right.
If they're just up here, you can change, by the wind. So have a plan, but also, what is your plan for BP allocation? What's your plan for hedging? What's your plan for risk management? What's your plan per strategy? Your exit, your entry, your adjustments. have them written down. I'm extremely mechanical. I don't just wing it like, okay, I'm going to move this down because I'm going to add more delta or subtract. I don't really trade that way. I'm pretty basic, which is
Right.
probably what attracts more people, is because I'm just a basic guy with a plan
Right.
that follows his plan, and I'm going to do well because of it.
Now, do you consider, I think maybe you tell me if I'm wrong. I consider you more of a campaign trader, and I consider myself more of a opportunistic trader. So the difference to me is a campaign trader is a person who would put on trades, not necessarily in the ideal environment, but based on time that you have to put in so many trades per week or per month, and I only put trades when I see the opportunity. Did did I correct? Did I make a
So
correct
half there.
assessment?
So one of my probably my main trade is the 112 trade.
Right. You
So
are the
I know you
Mister.
talked to
You're the
Bobby. I
Mister One
showed
One
Bobby
Two.
that trade years ago. I actually, and everyone thinks, where'd you get the trade? I'll tell you where I got the trade from. There's a company out there called Navigation Trading.
Okay,
Okay, and they had a strategy called the Iron Duck.
I
And
love
the
it.
Iron Duck was basically what we call the bear trap type of trade. It looks
Right.
like a 111, 112 trade. Well, we just started monkeying around with it, and they were doing like 17 to 21 days, which was just too short and too scary for me. So we just started evolving that trade into a put version instead of a call and put version.
Right.
And then it became a 111. Then it became a 112 because I could get more credit and get farther away. Because based on the premise that I'm a chicken, and I don't want to be that high a delta with the 111. So I went farther out with the two because I felt I could be farther. That trade, the 112 trade, it's my core trade. I've been doing it for quite a while. That's a campaign trade.
It
So
is.
it's every couple of weeks I put a new one on. Outside of that, I trade strangles and I will trade other 112s, but not on a defined. I mean, I looked today and okay, I want to do one on oil. So I have one on oil. I have one in bonds. I have one in gold that I put on yesterday. Might have one in ES, which is different than the long term version because typically these I would do about 60 days
Right.
out.
Right.
So those are more opportunity type trades. I don't have to have one on and the same underlying all of the time. And strangles, I do a lot. I love strangles. It's probably one of my favorites outside the 112.
Yep.
The strangles my favorite trade, but I'm on all kinds. I've got them on oil. I've got them in bonds. I've got them in Russell. I have them in. I haven't done really hardly any in ES or gold this year because I don't want to trade a strangle on something that's parabolic.
No.
So,
No. No. No.
but I do trade those quite a bit. So there's a lot of. I think those are opportunity. Style trades, and I'll also do some naked puts or put credit spreads
Yeah.
on some
Yeah.
things.
To me, the best trade in the world is the naked put, and then all its variations. And now that you said that you do the 112 because you're more conservative, and let me, I want to be the devil's advocate here. Okay.
Mhm.
So for I'm always worried about units. I'm always worried about short units, right?
Mhm.
What and you normally do the 112 on ES or SPX? On
ES
ES.
in the main trading accounts, ES or
So
MES,
have
depending on
you
the
ever
size of
given
the.
it any thought of how much planned capital do you have to have in your account for every naked ES put that you have out there? Have you ever thought about that?
Yeah. So we do go over notional with everybody, make sure they understand the size. So I I totally get it, and I know where you're going on it too. In the IRAs accounts, we'll actually do more of the 111 trade
Right,
because it takes I don't want to have that risk. In my trading account, I'm okay with the risk,
right,
even though I do hedge a bit, and I'm okay with the risk, and I won't leave them on forever. So I want to close them out at a certain percentage. But I agree with you, and not everybody has that same risk tolerance, and they really need to be aware of, is a 111 a better suit you better. And if last week scared people that were in their 112s and people's buying power went up to 90 or 95%,
yep,
you got to look at that because too many units, which is what you're saying.
yes,
I 100% agree. It's the number of units, and even when I hedge, I like to hedge farther out of the money with more units because volatility will give me a better bang for my hedge
right.
with multiple units than it will at a higher delta with less units if the market sells off and volatility expands. But yeah, totally know where you're going.
Well, for a 112, how much capital do you allocate? Not the buying power that the computer takes out, because the computer might take out only, I don't know, $4,000 or how much buying power do you allocate in your mind to that trade, to a standard 112 trade on ES
Per unit,
per unit?
it's probably around 7,000,
7,000,
$7,000,
right?
$8,000.
And on a portfolio, I guess you're trading portfolio margin. The portfolio
I'm
margin,
only trading Reg T because I'm in this one main account. I've got another account with PM,
yep.
but because it's span margin,
Well, in futures, it's pretty similar, right? It doesn't matter.
yeah,
The cool thing about Tasty is in your retirement account, you could do 112s on ES, which is really, I think it's really cool. I don't want to turn this into a commercial for Tasty Trade, but in your trading account, in your
right.
retirement account, it's pretty cool that you can do that, right?
Yeah, the fact that I can sell naked puts, strangles, 111 or 112 trades or ratio spreads in a retirement account is the best thing going. I'm an advocate of Tasty Trade when it comes to that. So every account I have is there. I think they give you the best trading platform with a couple things that they can improve, obviously, but it's the best trading platform for my style of
Yeah,
trading.
I agree with you. And now that sooner you can gonna put the 112 all in a single trade, it's gonna be really, really cool.
That'll be a
That's gonna be a
yeah,
game changer, I
that'll be
think.
fantastic. And ratio spreads, because
Right.
I'll tell you, I just closed a ratio spread in RTY
Yeah.
a little right before I came on here,
Mm-hmm.
and you have to leg out. There's slippage all over, because there are some wider spreads in
Yeah. Yeah.
RTY.
I
Anyway,
understand.
the slippage gets you a bit.
And I on the videos that I do, I always try to focus more on the risk than on the reward. Now, what would be the minimum buying power usage that you have in your account, and what would be the maximum buying power usage that you would have in your account
As far as like
during
a
the year?
percentage of the account,
Yeah, as a percentage in the account.
yeah, I'm pretty much a 50% guy.
Okay, that's cool.
So my trading rules are very specific on it. So if 50% is my goal or my maximum,
Right.
when I get over 50%, I go into a lock. I will not enter a new trade. So if I'm at 60% or something because buying power has increased, I won't, even though Tasty didn't say it, I'm basically closing trades only
I want to
for
stop you
myself.
right there and have everybody rewatch the last 20 seconds that Tom said. The reason I know Tom is a successful trader is because he has a threshold. If he reaches that threshold, it stops. And please keep going. That to me, it's so valuable. That's the greatest tip you've given today. And a lot of people, they have 50 and then they go to 60, 65, and then it just explodes to 90 and 90. And thank you for saying that, Tom. That is one of the smartest things, and that's why I know you're a really good trader.
And last week's a great example. So last week, I trade the 112 at 120 days
Yep.
or 111 or whatever at 120. Well, 120 days rolled around and I was sitting at 67, 70% buying power because
Sure.
volatility had increased
Sure. Sure.
and
Sure.
I have other trades on too. So Wednesday would have been the day to add I couldn't add a trade on Wednesday. I couldn't add a trade on Thursday. I finally was able to close some other trades for winners.
Right.
And my way of adjusting buying power is I have a threshold that if it gets to a certain point, now I'll start to look to close. I in smaller accounts, volatility can really burn you
Right.
quickly. So
Right.
a
Right.
$10,000 or $20,000 account, you can go from 50 to 100 in a week.
Yeah.
In a larger account, like a half a
Half a
million or
million
$1 million
dollars.
account,
Yeah.
you're going to go up to 70 or 80% maybe, which you won't get there typically
Right.
as quickly because I'm a little bit more diversified and it's not all ES for me. I've got a lot of oil.
Right.
I try to keep it kind of even between oil, gold, bonds, a little bit. But yeah, I couldn't trade until I actually took some stuff off, and I wanted to because I felt that the market was going to
Right.
it was getting a little extended.
Yep.
I'd love to put trades on in a down move
Of course.
when you're selling puts,
Yep. Yep.
and I was stuck. But got to stick to your plan and understand that hey, you can't make a move at this point in time. And if you got stuck, which some people did,
Yep.
up at 90 to 100, and they were, tossed, sent them the message that, hey, you're in closing trades only. Okay? You didn't adhere to that methodology. You were trading too
Too big.
big,
Right.
and you got a reprieve. Monday and Tuesday of this week was the reprieve for all of the dummies
Yep.
that didn't
Yep.
plan correctly last week.
Yep.
You got a chance to fix it
Yep. A chance
before
and
it gets worse
yeah,
again.
get out of jail free card, right?
It exactly was.
Yeah.
Yeah.
And do you ever like grab two units and sell one closer at the money unit to reduce from two units to one unit? I don't know if you know what I'm saying. Let's say you have two units at 4,000, and in order to reduce risk, would you close those two units at 4,000 and maybe sell one at 4,400 to reduce risk?
Not typically in my plan. For me, I will usually just take those off.
Okay.
If it's a campaign trade, I try to stick to my plan
Okay.
pretty carefully. I will take them off early. I don't wait till expiration, but I'm not going to close at 50% either, because there's X amount of money that I want to make out of it.
Right. Right.
But if it's one of those opportunistic trades, as you were talking about, there's nothing wrong with closing those early. Or one of the nice things, and my partner Igor covers this a lot,
Yep.
is we like to trade multiple contracts. So it's harder when your account's small, but once you start to get up to $1 million or so, we recommend that people don't even use PM until you get to at least a million. And the reason for that is because you can't get enough multiple contracts on like SPX or something.
Right.
And the best thing you can do if you're trading a 111 or a 112 is to have maybe a 5-5-10 type of trade
Yeah.
set up,
Yeah.
so that you can't, if you're trading strictly a a 1-1 and actually only two,
Right.
it's tough to adjust and take advantage. But if you're trading five contracts and 10 naked puts in a larger account, well, now you can do exactly what you're saying. We could close five of those and leave five of them on
Right.
to reduce risk. We could roll them up. There's a lot of things we can do. We play with the put debit spread quite a bit as well, to try to lock in profit. If the markets head down, we try to lock in some of the profit, roll up the shorts or roll down the longs or take some off.
Right.
Or maybe you get into where you have a few more longs than shorts in the put, and now it's more of like a ratio spread
Ratio
type
spread.
of
Yeah.
a setup. So yeah, lots of things you can do out there when you can trade multiple contracts.
We've talked about the two puts at the bottom, but about the put debit spread, uh, do you have a percentage that you like to close it at? If it's already 60, 70, 80, 90% value?
I like to close it at 100, but
Sure.
no. So, but I will start to adjust it for me when it gets close to 25% of the max profit. I will start to make some adjustments.
Okay. And what would those
So
adjustments be?
let's say it's a 50 wide,
Right.
and you've got two contracts or something. So that means you've got essentially $1,000 in there, or 50 wide,
Right.
two contracts. If I'm at 25% of the maximum profit on a 50 wide, that's when I'll either roll up the shorts or I'll roll down the longs half the distance and try to book X amount of profit.
Okay. That's smart. Yeah. Yeah.
And because we call it a bear trap trade. So that was a term we coined. The 112 was
Yeah.
a
I
bear
love
trap.
the trap. I love the trap. But since your trades are so many days so far, it's really hard to get to 60, 70, 80%, right? Because it takes a
Yeah,
lot.
you've got it. You're waiting a while. At least on the 120-day ones, on the
Right.
60-day ones, you have a better chance. We also will do some versions of the 112 where I will put it on for no credit.
Okay.
So I will put the naked puts way off,
Out of
or I'll make the put debit spread much wider, and now I've got a big, fat, giant trap. The naked puts are way down at 4,000 or something,
Yep. Yep.
and all it cost me was buying power.
Right.
It's not going to generate any credit, but I'm putting it on when the market is overbought, and potentially RSI is overbought or something. I'll
Yep.
use some basic charting to see if I can catch a bear in that trap, and of which case I'll start to unwind the trap a bit just to lock in some of that profit, book the profit, and then I'll leave it like kind of a runner, small PDS,
Yep.
on at the time. So
Do Have you ever waited till the end of expiration to collect on your trap on the debit spread?
2022 was my best trading year ever. I hit 82% return for the
Wow,
year.
bravo.
And the reason for that was on the 112, I had 112s and I had 111s.
Right.
Okay. And I actually got stopped out on 3 of the 111s, but none of the 112s.
Okay.
Uh, that year, which was kind of a watershed moment for me on the 112 because the 111 was a higher delta
Yep.
and I got stopped at a 2x loss on the naked puts.
Right.
But the 112s never got to that point. But what happened that year was almost half of the trades ended up in the trap. And back then in 22, I was pretty much only taking them off with 1 to 7 days left in the trade.
Wow. So you
But I was
you were
getting mostly
patient.
60 DTE. So mostly 60 DTE, not the 120 that I'm
Yep.
doing now, but
Yep.
mostly
Yep.
60 DTA. So I wasn't taking them off early. I was just waiting till the final week and I was closing the trap. But the overall return was fantastic that year. It wasn't just 111s and 112s. I mean, strangles, I did really well in strangles because premium
Yep.
was just so good
Right. Right.
that year.
You know,
And I couldn't miss.
when people tell me how can my stock end up inside the trap, I tell them that probably the stock has to go past the trap and come back. It's like
Hmm.
hitting a a golf ball past the pin and have it suck back to the pin, because
Exactly.
it's really hard for the stock to go down and stay at the trap. In my point of view, the only times that I've been lucky is when it goes, because I mostly do 1 to 0s, which are ratio spreads, right? So for me to win on the ratio spread, I really have to let it go past and then hopefully come back. And that's the only time that I found that I really made my money on that debit spread. Now, you said a couple of very very interesting things. So I don't know if you know this, but as a social service, I teach personal finance for free, and one of the things that I teach is acquiring assets that either pay you income, passive income, or just assets that will hold value because they're printing so much money, and money it's becoming worthless. So all of the things that you are trading are assets. The S&P 500 is an asset, gold is an asset, oil is an asset, bond is an asset. So that's another very smart thing. I think that's another, maybe you haven't rationalized it, but hearing you, that's a super smart thing that you set down. You're only trading things that are assets. And if I was trading your account, I wouldn't be afraid of those naked puts, because you really want to acquire assets cheaper, right? So the 112 trade, the 111 trade, the 120 trade allows you to buy assets cheaper. So even let's say, even if you get assigned
Yeah, 100%.
on the asset, those trades are meant to generate income, of course, if Armageddon doesn't happen. But even if Armageddon happens, if you have the buying power and the notional amount of capital in your account, you're actually acquiring assets cheaper. So that's another part of your trading strategy that I really really love, is your
Yeah.
asset acquisition via that type of trades. And
And I agree with everything you said on the asset pieces. To me, I don't. I'll tell you, I don't even own a car. So my wife has a car. My
okay,
kids have a car. I haven't driven. I haven't. I've been working from home for a decade. So uh, a car doesn't make me any money.
right,
And yeah, yes, you need it, but my wife also works from home, so it
right,
makes life easier. But I would rather take 30 grand and stick it into a trading account and try to make money off of it. Or I want to buy assets that, again, like you said, generate additional cash flow,
right, right.
because it's all about cash flow to me. In
It
fact,
is.
even when I'm building my trade plan and I'm working with people on it, to me the whole goal is I'm shooting for income generation, but I don't take the money out. So it's wealth creation, but it's I'm just trying to generate X amount of money consistently every month. I don't need to take it out to live.
Yep.
I have multiple streams of income, but I want to keep I want that money. So it's to me it's always about cash flow. It's always about income generation. It's about multiple streams of income. And to me, all of these are little multiple streams of income that eventually if you want to retire, now you can start to pull those out. You might ratchet it down to 1% a month goal
Yep.
or something, and you might just go to 111 trades that are smaller and maybe a few other campaign style trades and selling. I love selling leaps on SPY. It's one of my favorite strategies.
Have you seen my my video that
There
I
is.
what I teach my kids to sell spies 1 year out and try to collect 1% a month on that, and
Hmm.
look at it as if it was a rental property. That's yeah. I my kids
So
do that
I've got a
every month.
strategy similar.
Yeah, yeah. I tell
So
them
it's
try to
just
collect
selling
one
leaps on
percent a month.
SPY.
1%. Try to buy an apartment building or a condo that gives you 1% a month, and the stock market can crash 15 to 20%, and you'll still be fine and still collect that 1% a month. So you're absolutely we're on the same page. We're exactly on the
I
same
think it was you years ago that said this quote, and I've stolen it, so I'm using it. So if it was you, then I'll attribute it to you. But
page.
he who dies with the most SPY wins. I don't know if that was you,
it,
but
it could
I don't know
be,
if that was
yes,
from a
it could
Liz and
be.
Jenny
Yeah,
show
yeah,
that you
it could
did or
be. It
something.
could be. Yeah, yeah.
But
Because that's
that
my thing.
sticks in my head.
Asset
He who dies
acquisition.
with the most SPY wins, right?
Right.
So why not sell naked puts on SPY? I
Yep.
sell leaps on SPY. I sell around 12 delta, 12,
Yep.
14 delta, something around there. And you can, in a PM account, I don't think people also realize how, if you have a PM account, you don't have to be doing 112s and all these other things. You could right now, bill or T
Yep.
bills are paying 5%.
Yep.
Well, in a PM account, you're only getting tagged on like 1/7 of the total value. Okay,
Right.
you can go to 100% of your account in bill and still trade SPY leaps and because you're even in a Reg T
Yeah,
account,
and you won't be paying margin because your margin is based on cash. Since you're bringing
yeah,
in cash, you're not paying margin, right?
right. So you could go 100% in bill the
Yep.
ETF
Yep.
at 5%. Even in a Reg T account,
Yep.
that means you can own 4 times the amount of money. So if you had a $1 million account, you could have $4 million worth of bill earning 20% a year,
Yep.
okay, because of the margin. And then you could also be selling SPY leaps on it. And I don't know what else you would need.
That's it.
Everyone's working too hard. Just not that hard.
Oh,
Keep it simple. We don't need crazy
no.
strategies that are hard. Just sell some naked puts on SPY and put some bill in your account until bill goes back down to 1 or 2%.
You
Then
know, I thought we only gonna have a couple of years, but now with inflation kicking back up, maybe we still have 2024, 25, maybe a little bit of 26 left. And what I'm doing every time, I believe it or not, 85% of my money or 90% of my money is in treasuries, like you said, and now every time I get an expiration, I take 10% of that and bump it to 10 years out. And then I take 10% and bump it 5 years out because I still want to, if I'm still around in 5 or 10 years, who knows? But if I'm still around in the next 5 or 10 years, I still want to be collecting that income for the next 10 years because, this could this could disappear and we're going to go back to 0% interest rates, and
right.
which I think we won't. The reason why I think we won't, not because they don't want to, they want to, but if they go back to 0% interest rates, then inflation's just going to skyrocket again, and then it's going to be a double whammy. That's why I think if we interest rates go down, I don't see them going down below 2%. Myself, I'm not a macro analyst,
I 100% agree with you.
because then they're just going to be destroying it, and for unfortunately now the government, their number one expense is interest rate, so they from one hand they need to reduce the interest rate, but if they reduce it, the inflation is going to skyrocket, and then the people that really get hurt when inflation goes up is the people that have no assets, and that's why I'm always harping, buy assets, 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 and the people who
Mhm.
really get hurt in this world, the world we live in right now, is people that actually don't own assets and owe money, which is even worse, because then
Right.
y- your debt is another person's asset. I don't know if you know what I mean. If you look at a bank's balance sheet,
Yeah.
the loan you have is their asset, so you're actually their asset. You're the ass. You're
You're
the ass
100%.
in
You're
the
100%
asset,
right.
right?
You need to be the bank, not the other way around.
Exactly,
So you need to
exactly.
be generating cash flow
Yep.
on your assets, which is why I'm not even opposed. We don't have to get into this
No.
today. We'll do it on another segment. But
Sure.
I'm not even opposed to people renting. So rent a house. Why buy a house for $300,000 when I can stick $300,000 into an account,
Right.
probably make 1.5% a month, make 18% a year on that, pay my rent, and then still have go to Florida,
Yep.
play golf all day. I mean,
Yep.
all I want to do is play golf, sit by my pool, sit by take a sit at the condo, and travel around the world. I don't want to be glued to a screen trading stocks all day, even though
Right.
it's I enjoy it. It's fun. It's my passion.
Right.
But it's so is knocking the white ball around the course all day long. So if I can do that instead and not have to be checking my balances every 5 minutes, I would rather do that.
I don't know if you know that I'm in the golf business as well, but I wanted to
Mhm.
ask you, besides trading, is there any other business that you're in?
So I do some consulting. I'm winding that down,
Hmm.
but I've done sales and business consulting for many decades,
Yep.
and we it's a similar thing. We coach people how to be better, and we coach companies on process improvement. It's the same thing with your trading. You have to have a business plan.
Yep.
You have to follow that plan. Like you, I have a spreadsheet, and we all of our members we teach them how to build a spreadsheet to track every trade,
Right.
how to go back and as if you were the CFO, you got what worked, what didn't work, what can you improve on. Continuous process improvement. I mean, everything works until it doesn't. So at some
Right.
point, a 112 won't work, and we'll have to figure something else out. Okay,
Now,
but for the most part, selling puts works and has worked for nearly ever over the long term. And it's just being consistent and mechanical and repeatable with everything that you do,
yep.
and having and when you have a trading plan, okay, your mindset is not or your is so much easier because
Yep.
I'm not emotional about it because the plan said to close it, so I closed it.
Right.
Okay, I don't get I don't have any emotions tied to anything that I own or sell. I don't care if the market goes up or goes down. I sell, I make money, I take a couple losses. It is what it is. I trade a plan, and I'm pretty unemotional and mechanical.
Now, on your plan, what is your monthly target or yearly target return for your account if you're invested at 50% of your buying power?
So 50%. I'm typical for my main trading account. It's 3% a month.
Wow. Okay.
For my IRAs, it's 1.5 percent a month, and for a larger account over 1 million, it's 2%. It's
2%.
1.5 to 2%. The one trading account I use with our members is about a half a million.
Okay.
I started at 30,000 a couple of years ago, and it's up to half a million
Wow.
now. But I haven't changed. I'm sticking to the 3% because it's a trading account. It's not my life savings.
Right.
It's not my so for I have a 1.5 million account that's more like a 1.5%. I don't need to take
Right.
exorbitant risks there.
Now, for that 3%, do you try to sell 6% of extrinsic to keep the 3%, or how much extrinsic do you sell over that 3% to achieve it?
Um, it's probably around that 4 or 5%
Okay.
on average. It doesn't really get to that 6%. I find that I'm even close to 3% a lot of times to generate the 3%, even
Okay.
though it's 50% of the account.
Yep.
And the reason being is some of the trades I put on, even though my like a 112 trade generates around 5% a month.
Right.
Okay. But my max loss on that trade is still 2% of my net lick. Okay, the way I size it. So I
Yep.
size it at 2% of my net lick for a max loss. If I stop out, everything I do is pretty much 2x. Sometimes it's a 3x, but
So
uh,
if you win that trade, you make 1%, and if you lose 2%.
if I win that trade, I'm averaging, well, it's 5% a month. That trade is a 4 month long trade, so I would make 20% on each 112,
Right.
which is about 4 to 5% a
A
month.
month. Right.
If I would lose on that trade, uh, I would lose 2% of my net lick.
Right.
So yeah, obviously, when you're a premium seller, you lose more. You lose larger than you
Of
win,
course.
but you just want it. But you're putting the probabilities that you're going to win at 90, 95, 99% on some of these trades. even on strangles, my strangle strategy over years is 90%, 89 to 90% win rate.
Right.
The key is that I have to keep putting them on
Right.
in any underlying, sizing them exactly the same every time. Okay. And then I have the same stop loss on it. And I know it'll wipe out a handful of wins, but
Sure.
as long as I'm consistent over time, so you don't really have to shoot for like 5% a month because a lot of the times, even though I size them properly, I'm shooting for around 3% return on anything. And usually, once you put a trade on, the buying power starts to drop anyway,
Right.
most of the time,
Right. 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 Right.
So I might put it on with $20,000 in buying power, but maybe halfway through the trade, it's down to like 15,000 or 14,000. So my buying power, I can still use up to 50%. So I can add more trades on, and maybe not that. I'd like to diversify by just another little kind of rule thing, but
Yep.
I diversify by asset, by strategy, and by days to expiration. So I'd like to spread things out where I have multiple different asset classes. I have multiple different strategies. I might have a 112, a 111. In oil right now, I have a 111, a 112, a couple strangles, and a ratio spread,
Nice.
and a naked put, all in oil, but all on different expirations,
Right.
different strikes. Uh,
And do you do any hedging in your portfolio?
Yeah, absolutely. So one of the things we do too is that we will take the naked puts of the 112s off early, which will leave some of the put debit spreads running.
Right. Right.
Usually, then I'm usually out of the naked puts by 90 days
90
out
days.
of the 120.
Okay.
Usually 75% of the time. And on the 60-day 112s or 111s, I'm usually out by 45 days into the trade.
Right.
So there's always put debit spreads all over the portfolio.
Of course.
Those aren't going to help you a ton, but they'll give you
They'll give you some relief
some benefit.
for sure.
But I do also buy I buy put hedges um, there every month, and I just layer on put hedges at the beginning of every single month. I allocate about a 0.5% of my account towards hedges.
And is
So
there a delta that you
shooting
like
for
or a days to
yeah,
expiration?
I like, I was doing higher delta. And like I said, I started to use the same amount of money and go down and buy more. So I'm down probably closer to 5 or 6 delta puts, but it's only there to mitigate I'm really only worried about the
The Black Swans hedge, the
eight.
Vega.
I don't care about the black swan at all. If it happens, we all die. So I'm worried about, I'm worried about the 8 to 12% that happens every 2 years.
Yep.
I'm not, now these will certainly help me in a black swan event. And last week, what we also noticed, and again, I'm not here to poo-poo the black swan, okay, but everybody that had a black swan hedge on last week had a big problem because they still had a ton of short puts on.
Yep.
Well, those puts didn't help you last week. In fact, those puts hurt you because your buying power went up, and those people went to 90, 100% buying power and got stuck in their account
Yep.
because all of the short puts that they were buying in this 5 to 3, 7 to 3, 7 to 4, whatever ratio you're buying them on, all those naked puts blew up in volatility because you still had a bunch on, and the market didn't go. The market has to absolutely black swan crater
Right.
for a put that's down at 1 delta to even wake up and start to think it could help you.
I
So
had.
for me, I like higher delta,
Yeah.
more puts, and if we start to get in trouble, I'll start to just I'll buy or I'll short futures too to just to ease up buying power in the middle of any kind of a serious downtrend. So
Yeah. For me, I do three types of hedging. The easiest one is just sell futures outright. The second
mhm,
one is buying 70 delta SPX long put. So I sell the futures. I buy a 70 delta SPX long put on demand. That really helps a lot in the buying power.
sure,
And the third one
uh-huh,
that I like to do, this one you might enjoy, is I sell an at the money SPX put, and with that money I buy two further outputs. I don't care how far they are, and for a credit. And when you do that, the reason I like that is that trade, if we crash, it saves you. If you go up, you don't lose money. It actually, because you did it for a credit, if you go up, you don't get killed. The only time you get killed is if it goes down slow or you leave it on for more than 1 or 2 days. So that's the type of trade that I like to do a lot, is a reverse ratio for a credit. And if we go up, I don't mind it because I don't lose money. And normally the hedges are painful because when the bounce comes, you lose a lot on your hedge. So that's a type of hedge that I found that I
Great.
really enjoy. And it's only for 24, 48 hours, 72 hours that I leave those on. But
Sure.
those are my three go-to strategies. I stopped doing black sweat hedges. I stopped buying uh, out of the money puts, and because I said, if I need it, I've made enough money that I have the money to hedge on demand.
I 100% agree.
But not
And if we're
everybody
in the
has.
middle of it, you'll get a chance in the middle of it. In the middle of it, you're going to get a chance as long as you didn't over leverage yourself and you have no buying power, which is why buying power is king, queen, jack, of everything. Delta, theta, it's all great, but buying power rules the world. And as long as you don't over allocate and you have great buying power in the middle of a downturn, you can always do any of those things you just said, which is, again, I'll buy, or I will short the futures. Okay, so I'll short futures, or I'll buy puts, 70 delta, 50 delta, or whatever. You can buy those, alleviate more buying power by doing that. So you can manage your way down as long as you gave yourself a little bit of room and you weren't over leveraged to begin with.
Excellent. No, great. Tom,
Yeah, good.
this has been a great chat. I wanted to ask you, how can people get a hold of you?
Yeah, awesome. So you can follow me on YouTube with Tom King Trades, or if you want to check out what we're doing in our Discord or in our investing service there, you can come to it's right now. You can go to Mr. Top Tick / Income Navigator. So Mr. Top Tick
Let
/ Income
me,
Navigator.
okay,
That's where I am.
Mr. Okay, let me see, let me try to put it.
Mr. Top Tick.
Mr. Top
The new
Tick,
website is up. So yeah,
Mr. Top Tick
yes.
dot
I'll
com.
pop it in the chat here so you'll have it.
Let me. Oh my God, I love the name, Mr. Top Tick.
Yeah. So you can find us there, and you want to come build a trade plan, trade with us. It's a great community. What I really like too is I like to be in a community.
Is this,
This is
did
not
I
my
did I
service.
put it correctly?
Yeah, looks correct.
Oh, great.
And I was originally just a member, just posting my trades, and the reason I liked it was I want to be held accountable.
Yep.
So I would post my trades because it would hold me accountable to not do crazy stuff. Because people would say, "Well, why'd you do that? What are you doing that for? That makes no sense." And then I'd be looking and go, "You're right. It doesn't make any sense. If you're the smartest person in the room,
Right.
you're in the wrong room, right?"
Exactly.
So
Exactly.
I want to be somewhere where I'm getting challenged by members and other traders and people that are smarter than me, frankly. I just have a good plan and it works. But I post all my trades just so people can say, "What are you? Why did you do that?" It forces me to really make sure that I don't do dumb things.
Right. No, that's super smart. It's actually people helping you. Look,
Yeah,
yeah, that's great.
they don't realize it.
Oh my God, I
So
love it. I'm gonna. And is Mr. Toptic, is it your service or is just a community?
I run it with a gentleman named Igor Ivanovsky, and he and I both run that service now. And he's a phenomenal trader.
That's great.
So I've learned so much from him. But we've got a lot of other really good traders that share their trades, and
Wow.
we ask our members to share their trades because again, it holds you accountable for not doing silly things
Right.
uh, out there. And I think when you have a community, because trading can be a lonely business
It
for
is very
people,
lonely. It is very
yeah,
lonely.
you
Yeah.
got to have other people that you can just chat with that share the same passion,
Yep.
share the same concepts. We're all premium
We
sellers.
are.
Okay, so we're not out there, buying stocks and
No.
long stocks and long options. No, we're selling premium.
Right.
And people are, what about this? And people come up with all kinds of crazy looking trades and stuff. And some of them are beautiful looking things that,
Yep.
wow, if that resonates with you and your risk tolerance, do it.
Right. I agree with you 100%. Wow. I'm gonna have to check it out. And your
Yeah,
YouTube channel is Tom King Trades.
yeah. Tom King Trades on YouTube.
Yeah, I love your channel. I'm a subscriber. I watch practically all your videos, and I really enjoy them.
So it's good. It's good nighttime stuff. You put it on, you'll fall asleep in 15 minutes. And so if you've got
That's
insomnia,
not it.
hop on the YouTube stuff. And
It's actually excellent content, Tom. I really, really enjoy your content. I love it, actually. I love it. And you do a great
yeah,
job.
good.
And
Yeah, same here. Love your
I,
stuff.
I want to thank you for coming in the podcast. And everybody there, if you want to grow your pile, follow Tom King. And remember, you got to risk it to get the biscuit, baby.